Kunal. But let's welcome on board Ajay Srivastava as well and find out what he's doing in the market right now. Ajay, hi, morning. Great to have you on
Good
the
morning.
show. Good morning. And Ajay, seems the domestic event of Bihar election verdict seems to be par for the course, rather. Well digested, I would say. But what about the global weakness? Should it persist? Could that rub off on us? And wrongly
I
this
wish,
time.
I can be Nostradamus or God, but I know one thing for sure that the US is a strong market, will remain a strong market. Global weaknesses, in the sense of Europe is getting its act together. So, on the overhaul, I think the world markets are looking much stronger. I don't know if you noticed something, a very important change happened in Europe last night, that they've changed the ESG norms completely for the companies, and most of the companies will be out of it. So the woke culture, which was killing the European company, is getting over. They will become big consumers and big producers. So America, you've seen already what's happening on quantum computing, AI, and you name the works. I think we will see ups and downs. We will see valuation kickers move back and forth. But overall, the global strength of the equity market remains strong. And the beauty is the newer age companies, which are the Magnificent Seven equivalent, the quantum computing companies, the newer age, and with Europe coming on board, you don't need to feel pessimistic about the world market. Believe me, you don't need to be.
But Ajay, how do you draw up the India correlation? If you have to play the AI theme sitting here, what do you do?
Well, you just invest in the US. Government allows you to do it. Just go and do it. It's as simple as that. I don't think there is another way to do this or to say this. The fact that we have all been looking at our Indian portfolios to say we are Indians and therefore invest in India. The fact is we are less than 10% of the world market cap. Therefore, to invest in just in 10% of the market cap of the world, not a very sensible strategy. And now all the experts have also learned a lesson that grandmom was better. Gold and silver is pretty good. So, you got commodities, you got crypto, you got international stocks, you got Indian stocks. I think the issue with India is going to become how do you allocate to these four? Because we are kind of, as a community, underinvested in all other three blocks. And we're good at real estate. We invested a lot in real estate. But if you look at gold, silver, look at crypto, look at international markets, there's need to get more allocations than India. I think that's going to be the theme of the next, couple of years, that we need to reallocate capital out of India, even though it sounds unpatriotic and un-Bharatiya and whatever it is. But that's the reality of financial markets.
Point taken, Ajay. Good morning. This is Harsha.
Good morning.
Ajay, let me try to play devil's advocate here. Let me try to get a sense on how you view the tilt in valuations. We've seen a significant run-up in the US in terms of AI stocks, in fact, across the world, right? It's not like Taiwan and Korea are doing anything different. The valuations there as well have run up. Is this the right point to be investing in some of these markets? That's what I'm trying to get to.
Harsha, I'll ask you a question. Do you know what is the valuation of two retail stocks in India which are flat growth or negative growth? P of 90.
That's true. That's true.
All right. And we are arguing with a company which is generating billions of dollars in cash in a global monopoly on a P of 30. So this whole paradigm of higher valuation of AI is a good paradigm for the US guys because they're not used to these PEs. We are paying 90 Ps for ridiculous stuff in this country, retail companies. That's what we're paying 90 Ps for. And we're still buying these stocks in India. So for an Indian, 30 P for a company producing billions is a manna from heaven. We don't have these companies in India. And I keep saying this, the India for market for the next 2 years is going to be the biggest valuation minefield we have seen. And the reason I say this is that the bulls were protected by the short selling ban in India. If SEBI approves this, and I think it's a great thing they approve a proper short selling opportunity in India, you will see this minefield cracking apart like no tomorrow. And I think we must be cognizant. If this regulatory change takes place, we will see valuation in India coming down of 90% of the stocks than what it is today. And, so I rest my argument, don't quibble with 30p when you're paying 90 for a flat company.
Ajay, give us a sense, where do you see Indian markets at this juncture? You're clearly telling us to diversify globally or telling our viewers to do that. But currently, at this juncture, how are you seeing Indian markets? Growth has likely surprised on the upside where Q2 is concerned mildly. Could H2 be a real surprise in your opinion in terms of earnings growth?
I think the point is that Asha, that we need to keep shifting our where our portfolio choices are. You've seen what's happened as we sit in this quarter with the gold loan kind of companies. They're exploding with kind of business because the regulatory framework was relaxed. They're good quality companies and they've done remarkably well. You'll see in auto, GST permanent, it's a beautiful permanent decision to reduce it. It's going to be a great trigger for this one. Auto, we are a strong nation in auto. We don't need to worry about auto at the end of the day. So you have to go pocket to say, where are you invested? What is your entry point? Most important is what is the entry point? And are you alert enough to encash exuberance? You just saw less than 3 weeks back on Diwali, the kind of dumb, you are a good analyst. You should know the fact that how does an ETF of silver would quote at 30% premium to the intrinsic price of silver? It did quote at that price, and the people who encashed made money, people who bought lost money. The fact is exuberance will come, but the key is keep your eye on your valuations. I think in next 2 years in India, you will make tons of money, no issues about that. Eye on valuation entry, be patient with it, and encash exuberance. And third most important is exit when it doesn't fit your mentality or it's a sharpshooter investor. You have just seen, and I'll give you an example. It's not retail public which is stupid. Mutual fund managers can be equally dumb. They just took a big placement from a private equity fund in September, just before the results came out of a company where the private equity fund is the owner. The stock was bought at 906. In less than 1 month or 1.5 months, it's at 620. 400 crores of Indian mutual fund money went to the PE way. So don't blame the retail investors. Don't worry. Institutional investors are equally guilty of exuberance, encashment, and so on and so forth. The trick is do not get trapped into this valuation paradigm because this is going to go in the next 2 years. We will not have these 90 PE companies in the next 2 years. I can tell you that.
Those words, exuberance, frenzy, all remind me, and of course, trap also about what's happening in the IPO market. Did you fall prey to any of the IPOs, Ajay, recently?
No, luckily no. Luckily no. I think we're a little more sensible than that to look at, to go and fund a PE fund's exit. But it doesn't matter because at the end of the day, my country's mutual funds did exactly the same. They have encashed these PE funds at an valuation which they will never make money in a longer term. Short-term share price can get up and down. And I'm not saying all IPOs are bad. Some have been good. And you saw one listing took place. One can say exuberant. But by and large, it's ridiculous to value companies at 70,000 crores who has never made money in his life and is not going to make money. In fact, one guy came yesterday, believe me or not, a CFO of a company, I don't want to name him, to say profit is not an objective. Okay, that's fine. Please run your company. My money is not for you. That could be true for some investors. So I think it's not about IPOs. It's the valuation with the craziness has happened because our mutual funds have been complicit in buying these at inflated rates. They don't deserve this. You have given exits to PE at a valuation at the cost of Indian investors. I hope things wake up. I hope investors, our mutual fund becomes smarter and do not do what they're doing. FIs didn't do it. You did it. Now correct it, my friend. Past is over. But that's why I said that this hyper valuation IPOs are a thing of the past gradually. You will see 2-3 subscriptions already have kind of fallen. Share price can still go up after listing, but at least the exuberance of application has gone down in the last 48 hours.
So Ajay, when you talk about the Indian markets, is there a structural theme that one should look at?
Of course, I can keep saying, auto, we are world's best. There's no question about it. We control the world in terms of two-wheelers, and we are exporting cars now heavily. All the guys exporting cars. So I think in auto, we are very, very strong. We don't need to worry about it. I think in domestically, more than banks are rubbish in India. Don't worry. I've not wasted money on banks for the last 3 years. I'll not waste for the next 5 years. All right. Maybe a 1 or 2 banks, if PE fund buys it, I will do it, but otherwise, no. NBFCs, which are focused, as we discussed the gold loan, I think that will be the startling era. The key is pedigree. I think across India, pedigree has won the day. Whether you look at auto, I'm not saying buy it, please just take an example. The pedigree wins in the end. You saw a gold loan company today coming out, strong pedigree of 50, 70 years. I think this next 10 years is going to be the year of pedigree at the end of the day. People who focus themselves on the business and integrity is sharp. You don't want to invest in sharpshoot financial engineers at this point of time. So structurally, healthcare, hospitals, a wonderful segment. It will give us tremendous returns. It will go up and down, sure, but it will give us tremendous returns. Auto is absolutely a perfect story. There's so many more defense stories coming out in the market. They will again have ups and downs of exuberance and then disappointment and then go back to it. But that's the story of new age companies. They're good quality new age companies. Not everything is bad. There's one good quality company which just focuses on profit, does not talk of cash burn. I think expensive valuation, but still it's a good company. So I think, and we have got over 200 IPOs, which are good quality IPOs in the last 2 years, where prices have corrected. Nothing wrong in the companies. It was a pricing valuation. So you have enough entry points. Lots of new age companies have come. So choices abundant. I wish I could print the money and invest in them.
Ajay, finally, gold. It's been the rank outperformer across markets, across sectors, across everything over the last year and a half. Where to next for gold? Would you bet now at this juncture?
Of course. Again, I keep saying this. It's not about betting on gold. It's about allocation. You can't sit out of the gold and say, one day it'll come down and buy it. It doesn't happen in real life. Nobody goes and buys gold, tracks every day and says, okay, now it's gone down. But the fact is, supply is smaller than the demand of gold. That's a given. Number two is, it's the best form of security for any, and that's why I said gold loan companies are thriving, because of the fact that Indians store gold and take it out when they need it and they borrow money against it, most secured collateral. So therefore, and I still dedicated my Diwali program in one of the channels to my grandmother and my mother to say, they gave me sensible advice to say, every year your gold portfolio should go up, not go down. And I would still say the same to all my friends and investors. Do just every year, how much it goes up, leave it aside, but it should be higher than what it was previous year.
Okay, and we will follow that advice as well, I'm sure.
Thank you.
But Ajay, great speaking with you. Thank you so much for your time.
Thank you very much.